Hey, Brendon, welcome back to EV Marketplace on a Wednesday night. And it's great to have you with me because, hey, from my perspective, the general manager of automotive solutions at Pickles, one of the biggest auction houses in Australia, is the perfect place to go to get some data and some info on what's happening on both the used car market and the used EV market. And I know you've got a special interest, so welcome back.
Thanks, Ross. Great to be back. Only feels like yesterday we chatted, but there's been a lot go on since that conversation. That's for sure.
Yeah, I think you had a holiday a couple of weeks ago, much deserved after the first half we had. That's for sure. So
it was frantic, and it was nice to just chill out for 3 weeks. Yeah, absolutely.
I know. And look, I guess no one could have predicted 6 months ago when we were looking at this market, and it was ticking along, I guess, on track, we thought, on the used EV side. And I thought, well, maybe it's going to just keep going along. And then suddenly it just took off, right? And what happened from your perspective from the used car market? What happened in the general used general used car market?
Yeah, I mean, the general used car market hasn't been talked about too much, to be honest. It was all very much focused on EVs, but the focus on petrol and diesel cars really did come off. I think there was, just with petrol prices surging, diesel prices surging. Unfortunately, if you owned a used petrol or diesel vehicle, it just depreciated over that period of time.
Exactly. You saw that data coming through?
Absolutely. It really, we always see seasonality occur. So there's always used car prices on ICE vehicles tend to peak, on all vehicles tend to peak at March, right? They build up through summer and they peak in March, and then they slow down during the winter period. We call it the winter dip, and it's what we call seasonality. I think seasonality just returned earlier this time, and it's still early now. So ICE vehicles tended to price in February as opposed to March, and then and they softened, but they have softened to a point that we haven't seen in many years. So, but there's still there's some really good value out there if you're after an ICE vehicle. But equally at the same time, the EVs rocketed up during the same period. So something we haven't seen, really since, well, we haven't seen it when EV's gone one way and ICE has gone the other way, really. So a bit of a first.
I know you've got a mixed portfolio of assets that you've, on behalf of clients that you've got to sell. So we'll be reasonably generous today in our bias towards EVs. This one really shows that the price index, your own tracking of used EVs and used cars generally, right, in terms of pricing. So we saw a fall off in general petrol cars, but we saw a big spike as part of that demand for used EVs in that April May period, right?
Yeah, correct. So what this graph shows is what the vehicle prices are today relative to what they were pre-COVID, because there was so much seasonal activity. Sorry, there was so much activity during COVID and prices went through the roof. We wanted an anchor point back to what that was in the 1st of January 2020. And so that still shows that, today, ICE vehicle prices are, about 14% higher than what they were, but they were at sort of 25% higher before what we saw through all the geopolitical challenges that we've had and interest rates and everything else. But EVs have crossed over. I think you can see a little bit of a dip. That's the month of June, right at the end there. We started to see things like new EV supply come back, which I think then used EVs was the flavour of used EVs came off a little bit. We've also seen a bit of a change in the dynamic of what we're seeing what we're selling from EVs. So during that period, if you had a high mileage EV, it was a great opportunity to be able to sell it. So we saw more rideshare cars, more rental cars come into market than we would typically see. And so even the average kilometres of an EV that we sold jumped from 30,000 to 60,000 basically during that period of time. So that was really a real interesting watch over that period. So we did see prices soften, and I guess they were pretty high for a period of time. So that average is lower now because of the influence of the high mileage assets.
Break this down a bit more, because there's a whole lot going on in 4 or 5 months. It was just extraordinary. But are you seeing prices? We're seeing prices come back here a little bit on average just in the last month or so. That's the first trend, because we assume because of the petrol spike and the demand and the lack of supply of anything. and then they're coming back a little bit now, right?
Yeah, correct. They have softened a little bit, but like I said, the real drop off is more as a result of the profile of vehicle that we're selling with double the Ks.
Okay, so
Prices are going to go one way. We've
a
gone
lot
from
of
2.5-year-old assets to 3-year-old assets as an average. So the whole profile has changed a bit.
right. Okay,
So I expect that vehicles that the real price is still higher than what that is on a
yeah.
2.5-year-old 30,000 K car, which
Okay.
is what we were typically selling.
So so the second point, is that not the number of Ks for the same, or I guess they're probably slightly older cars generally with more Ks
Mm-hmm.
helped to boost that. So people were getting higher prices for older cars with higher Ks, and perhaps those
Yep.
people hadn't even thought about selling, and suddenly there was an opportunity to get a better price without going too
Yeah,
deep into the dynamics. They hadn't even thought about selling, and now suddenly with prices up, they took this opportunity, right?
correct. And I think, if you had an EV during that time, and it was low mileage and young, you're less likely to sell it, right? So
Yeah.
that stock of young, low mileage used EVs just didn't exist for a period of time. It all got sold, and then and then it was others that started to say, "Well, right, I've got a book that's a little bit different. Maybe it's time for me to
Yeah.
to rotate that now." And then that's what we saw. Equally, the volumes across this.
Yeah.
I think when we compare the volume for FY26, it was 150% higher than what it was for FY25.
Yeah.
So our volume has just continued to evolve, and we didn't quite, like, the last quarter didn't quite reach the heights of the Q1, which was really driven by that initial spike in vehicles.
Just remind people from your perspective, I think you've seen a lot more retail demand on. I looked at some traffic numbers on your sites as well. Absolutely extraordinary, the retail demand that's come through as well. We're in the same game. I'm looking at retail buyers and sellers. You're looking at more perhaps on the fleet side as in terms of sourcing vehicles. Do you want to explain a little bit more to people
Yep.
what services you're providing and who the clients are again, so they understand where the cars are coming from?
So a lot of the cars that we're selling are ex-fleet cars. Some are coming directly from the OEM to be sold to the OEM network, like the dealers themselves, the branded dealers themselves.
Yeah.
Some are coming from state governments, some are coming from councils, some are finance repossession, some are small corporates, some are rental. A huge range of people that have EVs, really those first adopters, I guess, are going through their wave of a volume. Disposal and fleet rotations. So that's where we're seeing them come from. And we know from our customers saying there's going to be a lot more come through in the future as well. And then, so on the buy side, we're selling to a mix of dealers, and we're to a mix of mums and dads and or small corporates that might just buy from us to put into their, the corner shop to put into their fleet.
But all this data comes back from Pickles' quarterly automotive report, which has just been released, which Brendon had a big hand in compiling, if not entirely compiling all this data that they've drawn together, and some commentary as well, particularly about the fleet market as well. And which takes us back to a couple of weeks ago for a start, right? When there was a bit of press in the news press about, and you were asked to comment on what's going to happen when supposedly there's an influx or a flood or whatever you want to, whatever it's a natural disaster you want to call it, of supposedly of EVs coming onto the market after they finish their fleet or leasing contracts. Set us straight on exactly what's going to happen.
Yeah, look, no doubt the FBT exemptions have been fantastic.
Yeah.
Novated leases have climbed. EV novated leases have climbed.
Yeah.
Some of those novated books are now 50% full of EVs. That's incredible. And that's customers, people that may or may not have been going to buy an EV, really motivated them to go out and get a vehicle, get into an EV.
Yeah.
So incredible uptick on that.
Yeah.
That's happened over the last 4 years, but that volume hasn't all come on at once. It's been
Yeah.
staggered over a 4-year period. So those vehicles will come off over a 4-year period. They're also on leases that might be 2, 3, 4, 5 years.
Yeah.
At mixed terms, and at the end they've got choice. They can replace the vehicle, and so sell that vehicle and get a new vehicle. So there's some mix, some volume that come back. Some people, usually a third of people will do that. Another third will go and extend that for another 1 or 2 years. Another third will go and buy that and own it for 1 to 3 years. So it's not like all those vehicles will expire and hit the market at once. It's very staggered. And even if people are were upside down as individuals, if you're going to burn $10,000, say, you'd be doing everything not to. So you'd be, waiting it out on car sales or putting it into the mortgage on the redraw of the home loan for a period of time, not paying lease payments, but just, that car will be depreciating and then dispose of it at a point in time. So people are going to do a lot of different things. So I just don't see that whole glut of used EVs coming back at once. It's very much diversified from my perspective.
Right. Glut, that was the word they used. And by the way, if anyone, being upside down, for those of you who don't know, is owing more on, or your car
Correct.
being worth less than what you owe on it at the time of maybe some commitment, like the end of a lease or the end of a loan or a balloon payment, when you've suddenly got to come up with that money and realize some value, or maybe do something else or refinance, or a million other options. But you're basically upside down in terms of what it's worth and what you owe. So I don't know if there's an opposite to that, but it's maybe it might be just a float. But
and even on that, but before before EV prices spiked, there was probably going to be more challenges in the market from people actually the vehicles not necessarily being worth what the residual value was. I think that's changed somewhat now because those vehicles have got a bit of a nudge along, and prices have jumped up. Admittedly, not to the level that we saw in April forever, but they will be higher than what they were. So I don't think there'll be as many people in negative equity when they get to end of lease as what they might have been ordinarily. So that's a good thing. That's a good thing for the novated market.
Yeah, and all the finances and the insurance companies and the customers are all breathing a bit of a sigh of relief over that. I think
absolutely.
My scenario was that in January we're all sitting out on our deck chairs and the tide was way out, and we were waiting for the tide to come back, and finally it came back in, right? But for a long time we were sitting way out on the salt flats waiting for that tide to come back in again. So luckily it has come back in. It's restored some sensibility and normality to some of the values. So that I appreciate that, because there was a few comments around and quite a bit of banter going on. Some of what you said in the mix was completely lost, right? And it wasn't considered. But so thanks for considering that. And again, you've done a lot of work in terms of your clients about this in future. So we see maybe, look, I'm like you, I'd see maybe 2,000 or 3,000 more cars coming on per month, maybe 1,000 more a week or at max, right? Would actually make the market for used EVs far more healthy, where we're only at about 3,500, 4,000 sales per month at the moment, a small micro percentage of the overall used car market. So I'm looking forward to more choice and more healthy product range coming through. But I agree, in a very staggered way. They went on staggered, they'll come off staggered. And I think the demand will be stronger and much stronger by that stage as well.
Yeah, I agree. We've actually gone to the one step further and put a solution in place for novated vehicles as they start to roll off, that you can come and get an offer from Pickles as buy price, or you can get a consignment value up front. We've created on our website, customers can do that. Cost you nothing. So you can get a free valuation essentially as to what the vehicle we would pay for it, or what we can sell it for. If it's got a balloon, we can resolve all of that on your behalf as well. So we've really built a lot of that, knowing that our presence was strong in EV. How do we do more for customers? Let's step into that novated space. So we've got some partners we're going live with at a fleet management level as often as we go out to those customers. So we're really excited by the opportunity that of this new product we've just rolled out.
And another innovation, which I really admire, again, goes back 6 or even longer now, but really in the public eye, was the battery testing and the state of health. And can you give us a bit of a summary? Again, we know that has certainly, the average battery health has been a lot better than everyone expected. That's one aspect. You've got those battery tests on every listing where possible. How's that been received by some of your buyers?
I think the buyers are loving it. If I look at the deal, we're now over 2,500 BEVs we've tested. It's great. Our testing partner is fantastic, really supportive. Which is we use the Avaloo solution supported by Nathan Gore-Brown here in Australia. So we do a lot together, which is fantastic. And the dealers, I think, just based on the volumes we're selling now compared with what we were, the dealers, they're loving it. Prior to us releasing battery health certificates on our EVs, dealers are buying in the 30% range of all of the EVs we would sell. And now it's like 50-50 between the dealer and the consumer. So it's just taken away all the guesswork.
I know, because I'm just going to remind everyone, if you went back to this chart here, back in this the olden days in 2022 when prices of used EVs were 160 on that index, were 160% of your baseline. Some dealers got a little bit excited and a little bit over optimistic about the expectations, and then got a little bit burnt. And so it's taken a while for some to come back. So anything that in the last 8-12 months to get them back into the market, to have some confidence, to give that support in a market where at least 50% of cars are sold by dealers. We're focusing on private, but need that other side to be held up really to make sure that the confidence in used EVs go forward. But what do you see in the next 6 months in your crystal ball? I know this is a tough one, right? But how do you see the rest of the year playing out?
Well, I thought there was a deal done overseas and, geopolitical events were going to calm down, but that seems to have blown up in the last few days, unfortunately. So, look, I think we will see, as those events calm, I think across the entire, it'll be good for the entire used car market, ICE and EV, right? We see, like I said, seasonality started early particularly for the ICE vehicles. We see that will, we've already started, we started to see, as things started to calm down, more interest back in ICE vehicles again, which is good for the whole market.
Petrol dropped quickly. Petrol dropped quickly and was cheap without the excise, with the excise subsidy. It was $100.50. So I understand, right? I mean,
so we see seasonality returning, I guess. So we're in that low dip now, and then we see the market generally just continues to climb up until Christmas, has a bit of a break over Christmas, and then keeps going into March. So providing geopolitical matters calm, soften, and the like, and we should see that return to seasonality. I think from an EV standpoint, I think there's still a lot of people interested in used EVs. This has really woken up that people to know you don't have to buy new as well, but there is a lot of supply in new. So I suspect there'll be strong sales of new assets, and there'll still be somewhat of a focus on the used EVs if that's your way, if you're that way inclined. Because at the end of the day, the ones we're selling, they've still got often 5 years worth of manufacturer warranty, and and they're low kilometre, and they've got a good battery health. Like, why wouldn't you jump into one, right?
I know. And the counter side of that, in terms of the general market, is the new ones just keep getting cheaper and cheaper as well. So if that's attracting people to the market, they can make a choice between a late model Tesla at the same price as a new different model that may be unknown. It'll be, the choices are there, and that's the great thing about this market. Hey, thanks for catching up again, Brendon. Brilliant.
No worries.
I really appreciate the work you do with this report, because it gives us some great insights. And all the best with Pickles for the rest of the year. It's going to be a boomer. Thanks, buddy.
Thanks, Rosco. Good to chat. See you, mate.